Hey everyone, welcome back to the channel. Today's episode is for the cautious people out there looking to start investing. I use personal capital to track my investment portfolio. My favorite perspective is the portfolio allocations view, and that's found by clicking on investing and then allocations down here. The visual building blocks help paint a very clear picture of my portfolio. As I drill into each holding, let's click on US stocks here. I get a further exact value and weight of every stock and fund that I track. Best of all, personal capital is free to use. All you do is sync up your accounts and let the app work its magic. So I'm right now in my US stocks portfolio. I'm going to click on growth stocks, large cap, and you can see some different holdings: Facebook, Microsoft. This is my Vanguard dividend growth fund, as well as my Fidelity S&P 500 fund in my 401k. And the nice thing is that it combines both my retirement accounts as well as my taxable accounts. Very nifty, very helpful, and just full of detail, which is so nice in this personal capital view. Here's another view of my asset summary as of January 17, 2020. As a cautious investor, I still have more cash than I would prefer, but as detailed in my previous video, since I can't predict when the next recession or stock market crash will occur, I am continuing to max my retirement accounts, 401k, and Roth IRA by year end with future contributions, and I will systematically be deploying my investable cash throughout 2020. So I'm trying to reduce that $37,000 down to about $15,000 for this year. And as a matter of fact, I have some buy orders in place for tomorrow. So by market close, January 21st, tomorrow, 3 stock funds will be added to my stock allocation. I'll be adding VXUS, which is Vanguard's Total International Stock ETF. I'll also be adding VO, which is Vanguard's Mid-Cap ETF. And lastly, I'll be adding VB, which is Vanguard's Small Cap ETF. So that will push my equities portion, my stocks portion, up to about 45%. And my investable cash will be dropping down to about 33% investable cash. As always, do your own research and pave your own path when it comes to investing. Investing is a very personal endeavor, and you have to be aware that there's a lot of noise out there. There's a lot of people with different strategies and financial goals than what you may have. So here are a few things to consider when you're first starting to invest, especially if you're a cautious person, if you're a cautious investor, like how I have been. So first and foremost, you want to choose your asset allocation. I periodically return to a Vanguard study about historical average annual returns based on different asset allocations. The link will be in this video's description. It's a fascinating study, and you'll be able to notice the worst year and the years with a loss. And with the worst scenario in mind, it's good to then make your decision because remembering to analyze long-term data is prudent, and you want data that includes multiple recessions / stock market crashes, because investing is a long-term game. So back to my presentation here, I'm aiming for 75% stocks, 25% bonds, and I'm taking the steps to get there in a steady, calculated fashion, because I do have more cash on hand right now, as you could previously see. You could consider the lazy portfolios when you're first starting out learning about investing. The Bogleheads forum compiles ideas from the investing philosophy of Vanguard's founder, Jack Bogle, and the Bogleheads forum includes a straightforward and digestible guide to investing for all levels, especially ones seeking simple investment principles that have been shown over time to produce risk-adjusted returns much greater than those achieved by the average investor. 3 basic funds that is commonly discussed are VTI, VXUS, and BND. So the VTI mutual fund example is VTSAX, that is the total US stock market. The VXUS mutual fund equivalent is VTIAX, which is the Vanguard International Stock Market Fund, and BND's mutual fund equivalent is VBTLX, and that is the total US bond market index. I'll be providing the bogleheads.org link in this video's description. If you're new to investing, consider opening a Roth IRA first with M1 Finance and following the Bogleheads investing ideas as a core portfolio. M1 Finance offers several advantages over its competitors in the robo-advisor space. With M1 Finance, you can invest exact dollar amounts through fractional share ownership of stocks and ETFs. And M1 offers commission-free trades, which is wonderful. M1 Finance works for me because when I first discovered the platform through someone named Lynn Alden, who writes an investment strategy blog, the link will be in this video's description. I discovered it in April 2019, and I was already making it a priority to max my retirement accounts through Fidelity and Vanguard. In my core taxable account at Vanguard, I had given up on swing trading and decided to implement a simple buy-hold strategy. And so what that means is I now keep less than 20% of my investment portfolio at M1 Finance, where I keep track of 18 different US stocks, as well as VIGI, which is Vanguard's International Dividend Appreciation ETF. As I've gone over in other videos, this is the main dashboard when you first log into your M1 account. You're going to see the pie chart on the left here, and on the right you're going to see performance data defined by different time periods, and all of the relevant tabs here at the top. If you scroll down, you can drill into the different slices that you create. In other videos, I will describe more in detail of my holdings, but here are my 18 US stocks that I track. I try to equal weight them, and 17 of the 18 actually do pay me a dividend. I do focus on more dividend growth companies and stocks. And here is the international stock slice, which is just a single ETF called VIGI, Vanguard International Dividend Appreciation ETF. Anyway, when you're first creating a pie, you're going to go to the research tab here, and under my pies, we can create a new pie here. And if we follow the Bogleheads forum information, that would consist of VTI, the Vanguard Total US Stock Market. Let's add that to the basket. we're also going to add VXUS, which is the Vanguard Total International Stock ETF. And last but not least, we would add the BND, which is Vanguard Total Bond Market ETF. And once we are done to that, we're going to add that, and let's create this portfolio. The new pie, it equal weights it automatically. Let us edit that. And since I am 30 years old, I'm going to choose 30 as my bond allocation. And I'm going to choose 45 here. And 25 as my international. And let's name this World Pie Hole. Alright. And once we save that, this is our pie that we created based on the Bogleheads lazy portfolio. After choosing an asset allocation of about 70% stocks, you can see that 45 plus 25, and then we would have a 30% bond allocation. And in M1 it shows you a hypothetical return of 5 years, 3 years, 1 year, 1 quarter, etc. Pays you a dividend of 2.4%, 3 total holdings with thousands and thousands of stocks and bonds, full exposure to the whole world, and a cost of 5 basis points. Very tax efficient, and you could also hold this in a tax advantaged account like a Roth IRA. I hope you enjoyed this little quick rundown of M1 Finance, and here is the world portfolio. So I really hope you enjoyed today's video about the lazy portfolio via the Bogleheads forum. If you have any questions about M1 Finance, about how I allocate my portfolio, please feel free to comment below and or email me at themindofchase@gmail.com. I hope you like and subscribe for more future videos, and good luck out there and happy investing, everyone. Thank you.